The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 21st Magical Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, no problem. You can always let those fingers do the walking. You can send me an email, steve@tfnn.com. Inside the Tiger's Den, though, any ping will do. So let's go ahead and get this show started on magnificent, magical, marvelous Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow up 303 points, 25,018 is the print. S&P is up 0.8%. That was 1.25%, by the way, to the upside. S&P is up 21 points. NASDAQ up 0.6%. 43 points, or 69.10 is the print. Russell up another 0.5% plus. That's 9 points. He's printing out at 16. Well, eventually it'll be six. Oh, it is 16.35. Gotta let my eyes focus. Semis are up 11 bucks, or 0.8%. So we're mean and green across the board. Gold is back $2. Silver up a nickel. Light sweet crude trading out at 72.03. That's up 75 cents. To the upside, dollar-wise, it's Google, 16 buckaroonies. AutoZone up 13. Boeing up 12. Amazon up about 10. Grainger, WW, worldwide, that's up 8.50. To the downside, it's Baidu off 10 bucks, nearly 4%. NetEase is down about 10 bucks, or 4% as well. INGN, INGN off 7.76, 4%. Ligand Pharmaceuticals up off 7 bucks as well. So nothing really huge to the downside. A few things moving fairly large dollar-wise to the upside. The first request came in from Tim, and Tim wanted to take a look at the S&P 500 for multiple different time frames out here. And he wanted to take a look at Stevie's red line. So let's start with looking at the S&P. Let's start by looking at the SPY. We'll just start here with the SPY. I believe that we have, let's see what the volume today is. And even though we're into a holiday week, about 29 million shares out here. That swing point back here is about 57. That's from April the 18th. We're well above that, or we tested it in essence again today. Volume-wise should be about 55 to 57 million shares. So similar out there. Last time we were up at these highs was a few days ago, May 14th, about 50 million shares. So there's no volume issue as we speak at 1:10 in the afternoon. Straight line math basis with what's going on inside of the SPYs out here. It still has a 1-to-1, at least a 1-to-1 A to B equals CD. That says, Tim, 275.68 is in the cards. Maybe even 280.20. That's just in looking at the SPY. You wanted the S&P 500. Let's go take a look at the S&P 500. We know that it made a nice little bottom out here. Did that with a Tom DeMark sequential count. That's the blue number 13 that is on my chart. We saw price moving lower, doing less relative energy. The bulls eventually showed up out here. So, and we've got price trading above Stevie's red line. You wanted to know what Stevie's red line number was. It's 2707.14 to be exact. What we haven't seen is a test of that red line. We never know. We know there's going to be a test. But is it going to be by moving sideways and the red line moves up? Is it by pulling back a bit? Is it just simply by pulling back? We don't know. It hasn't been tested, but over the coming days, that area should be tested. The red line. I don't know what number that's going to be at. Right now, it's 2707. We're trading at 2734. When we take a look at Stevie's chart out here, you're going to see a red dash and a green dash support trend line out here. That really gives us a target as to where the S&P 500 is headed. The one you're looking at, or should be looking at, is the green dash line. That is actually the high. Let me give you the exact date out here, because this is the one you'd want to be looking at if you were looking at a daily chart for your signals. Where price is headed to is the resistance of the trading session from March the 15th. If that high gets taken out, even though that would be before the swing point, which was on March 13th, that tells me that on a daily basis, we have another change in trend signal to the upside, because that would be a resistance level. So if you were going to ask me what's the most important number on Stevie's chart right now, well, I'd have to give you two of them. It would have to be Stevie's red line, and it would have to be the high from March 15th, and that's at 2763.03. Tim, if you close above that, you're headed back to the all-time highs. You can forget about this bearish engulfing candle out here from February 27th. Now, you can never really forget about it, but it does say you'd have another change in trend. Closing above the high from February 27th, that would just simply be icing on the cake. And if we were going to ice that cake, the number would be 2789.15. That would be your last line of resistance, of course, looking at the daily time frame. You want to understand this from your 401k account, so the question becomes, is it a weekly or is it a monthly number that you'd be taking a look at? Well, if we go to the weekly chart, you're going to see prices sitting right on Stevie's red line. I mean, we're talking about sitting right on it. Right now, we're at 2735.97. We're sitting at it. And this week, if we see a close above Stevie's red line, in essence, it'll be the first time ever since on a weekly basis, since the highs that were out there. That would give you another change in polarity, change in trend signal. At this stage, on a weekly basis, if you're going to ask me to make the call, I'm telling you, we've just traded right into resistance. So this is where the bulls and the bears have to tell us who is the one that is going to be victorious. But if we go take a look at the monthly time frame chart, things are looking mighty rosy. I didn't say rosy. I said mighty rosy out here. And the reason is, but the month hasn't ended, it's only the 21st, is that price is trading above Stevie's red line. And so we've got signals out here that tell you, that tell me that where price wants to head back to is the highs, the all-time highs. Take them out. Sell in May. Doesn't matter. Well, maybe it'll matter, but it doesn't matter as we speak right now. Lastly, if we go take a look at those horizontal trading ranges, here's the deal as we speak right now. The reality is we're just trading inside a consolidation box. But price held 2630.22. That was the bottom of its monthly horizontal trading range. Tim, the S&P 500 is headed to 2849. And if it takes out the highs, it's northward for the rest of the year. Steve Rhodes with TFNN. We'll be right back. One of the keys to success in anything is the ability to make new distinctions. So what new distinctions are you making to achieve even more success in your life? When it comes to trading and investing, I wanted to become the best of the best, which is why I went on to make new distinctions. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest have been tracking my newsletter signals, which have earned me the ranking as the #1 market timer in the nation for the S&P 500 in gold. On Wednesday, May 23rd at 5 p.m., I'm going to share with subscribers one of my newest distinctions, which is how to follow the money and do so with multiple currencies. emergencies. You see, money has to flow somewhere, and with the world getting smaller and smaller each day, you and I can identify exactly where most of the money in the world is flowing. Sign up for Mastering Probability by coming to the homepage of TFNN.com to begin your 30-day money-back guarantee trial membership and learn the exact tools that I use to time the markets. And if you can't attend live, don't worry, because the workshop will be archived on your members page for the next 30 days. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back. Dow's up 314, S&P's up 22. So, Tim, to answer your question, I don't know, when you sent in the email, you wanted me to take a look at the S&P 500, in essence, which we've done on multiple time frames out there. If you're already in, you've got long positions in there in your retirement account because that was the second email that you sent. Stay with that. There's no reason to make any changes to that. We're still in a consolidation, no big deal. Maybe we go higher and we pull back down to the bottom of the consolidation. I don't know. When we do break that consolidation to the upside, though, it is off to the races out here for the S&P 500. And actually, if we go back and we take a look at those horizontal trading ranges, the next tier or the next level that we would head to, not the final level, not like we're in the last innings of this rally or anything along those lines, just the next level is 3067. But you've got to close above, or the S&P has to close above 2849. Otherwise, we're just in your garden variety consolidation. We were in the same type of consolidation pattern back in 2015. There are a few things that are different right now that suggest that we're going to break the consolidation. We're going to break it to the upside, not to the downside. But the proof is in the pudding, and right now, the pudding, with regard to the S&P 500, has not been served. Now, if you heard the commercial on Wednesday, I am doing a workshop for subscribers, and if you're not a subscriber, you got to ask yourself, why not? Now, I'm sure there's several reasons why not, but if you've never been a subscriber to Mastering Probability, it couldn't be any easier. And for those of you that are looking to up your game when it comes to technical analysis in your trading and investing, just come on over to the homepage of TFNN.com and you can click on the workshop. That'll take you to the newsletter sign-up page. You get a free 30-day money-back guarantee trial out there, so it's very easy to go ahead and give the newsletter service a test drive out there. And what you're going to gain access to is the workshop that I do on Wednesday. It's going to be unique and different from the workshops that I've done before. before, but not different from the standpoint of the takeaway from it. Because this is really all about making new distinctions. It's all about being able, like, if we do the same things the same way, we're going to get the same results. And I want to be able to teach you how to decipher the markets from this point forward, how to be able to make new distinctions, how to be able to identify the global flow of capital, how to be able to follow the money, how to be able to take those data points, swing points, is what we like to refer to them, and understand what the message of the markets are around the world. And that can just simply be what you're invested in, because the more important question, Tim, I know you want to know what Stevie's red line is and what was going on inside the S&P 500, but the more important question is, how is the S&P 500 trading as it relates to global capital flows? Because when you can unlock that door, you will unlock the secrets of untold riches out there. Now, if you sign up for Mastering Probability, you're going to gain access as a bonus. Yeah, we've got more to my archive workshop, The Ultimate Trading Signals, Japanese Candlesticks, which is so important to understand those Japanese candlesticks. For example, is today going to be a hammer or not inside of the gold contract? I don't know. We know what to look for, and if it is, what does it mean? And what does it mean at certain points in the market? Look, you and I, we almost exclusively think in terms of U.S. dollars. Yeah. Hey, everything I've quoted to you so far has been as a result of U.S. dollars. But to better understand the bigger picture, we want to think globally. We want to think about that global capital flow. Now, what I mean about thinking in dollars is right now, if somebody would write in, and somebody did write in, it was a subscriber and was looking to add to positions in the 401k and wanted to take a look at the Russell 2000. So when I say thinking in terms of dollars, what I can share with this individual, I can share with you, is that the Russell 2000 has a confirmed A to B equals CD to the upside to give us a price projection being a keyword up to 188.48. More likely it'd be 214.28 out there. Why? Because of our technical analysis, when you pass a swing point, in this case here a B point, and you do it with wide price spread and accelerated volume, that's exactly what it did. If you look at the arrow on the bottom portion of my screen, you'll see that the B point of 129.10 was passed with accelerating volume. That bar, by the way, the day, the week, because a month, I take that back, the month out there was one of the larger ranging bars from a monthly standpoint. So it did everything that you'd want to see in the art of timing the trade out there. So the Russell 2000, technically speaking, in terms of dollars, has an A to B equals CD to the upside. But look, I'm not in the business of making predictions. I'm not like Karnak. Instead, I'm in the business of making projections. That's what Mastering Probability does. It gives you projections each day, each morning, where price may be pulling back to, where it's headed to. We want to make projections because, you see, the market is always giving you and I new information. And with regard to the Russell 2000, at the point in time that it gives us new information that says that projection is off the table, well, then that's what we'll do. We'll take it off the table. But right now, it's on the table. You see, you and I, we use patterns to be able to project. Yep, project, forecast what is happening in the future based upon past informations. I'm not using a crystal ball out here. When I looked at the S&P 500 and gave you my projections of where prices were headed to, where there's support and where there was resistance, it wasn't looking into a crystal ball. It wasn't what Stevie was thinking. It was just simply interpreting the story of the technical tools that I use out there. And you found that those technical tools are really good. Look, Austrian physicist Paul Ehrenfest. You got to talk to him about that name out there. But he provided this cool visual presentation about the transition, because markets are always going through a transition out here. And so he gave this nice little chart out here that helps us understand how one thing transitions to another. Inside the stock market, we're looking for how it transitions to another market. For example, the Russell 2000 has gone through a 17-year consolidation phase. 17 years out there. It had that beginning phase, lower left in the 90s, up into the 1996 level, and then there was this sideways large consolidation pattern. Once it broke through that consolidation, it generated its measured move, equal to, quite frankly, greater than the consolidation pattern. It only took 4 years, 17 years to consolidate, and 4 years to move the heck out of that. Another way that you and I can take a look at when something is transitioning is looking at a logarithmic scale. If we take a look at the Dow back in 1929, this chart here goes back to 1924, but if we just simply take the highs of 1929, the highs of 1966, what you and I are going to find is that the Dow found support at the crash of 87. How did that happen? Well, that really became a level of support and told us the Dow was moving into its next transition out here. In fact, the Dow entered even another phase, and it did it in November 2016. Did it really a couple of, well, really did it one way. If we take a look at that trend line, that logarithmic trend line back in 1929, all I'm doing is carrying it forward between the 2000 and 2007 tops out here. And price broke through that. That becomes the ultimate support. If there were to be a crash, and I'm not saying there is, you would look for that to become support. Here's the bottom line. Price is transitioning inside the Dow. It's headed to 30,740. It's not a prediction, it's a projection. The NASDAQ, 8,800. The Russell 2000, now 2,872. Come on, join me on Wednesday. Let me show you about global capital flows. I teach you a whole bunch of other things as well. Okay.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So almost as if, like, just segues out there. We had Alex write in and asked, is there a price target for a top in the IWM? Well, there are definitely price targets. I already gave you a longer-term price projection. The Russell 2000 has entered into a new phase, and until there's new information that shows up, that has to be, well, it doesn't have to be. That is going to be the new price projection, 2,800. It's now really all starting to fall in line because even I was asking myself, man, Steve-O, you say the Qs, the NDX 100, broke out of long-term consolidation and now has an 8,800 price projection, and you're saying the Dow's got 30,740. You know, how come the other indices haven't given you that same confirmation? And that's a really smart question. I am glad you answered that. But we are seeing is one by one, things are starting to line up and to fall into place because now we've got the Russell 2000. Yeah, the Russell 2000 has given us quite a price projection out here, so that all makes sense to me when you put it all together. Now, I don't know what your time frame is, Alex, with regard to what we're looking at. If we're looking for some kind of short-term top inside the Russell, it's not here just yet. There's not anything to suggest that it's here, but there is a 1-to-1 A to B equals C to the upside. So the next price level on the floor to the upside that the bulls are taking is the 164.98 area. That doesn't mean that it won't go up to another floor. Maybe nobody wants to get up at 164.98, and everybody wants to go to the 169.82. That's nothing more than the 1.272 A to B equals CD to the upside. But price has to close below Stevie's red line of 160.60, about 160.69. That's not exactly the number. It's 160.33 to be exact out there for there to be any problems in River City. Now, that's the daily time frame. If you and I from the Russell 2000, we go take a look at the weekly time frame, let's go see what it is telling us. And what it's telling us is, no problems in River City. Now, interestingly enough, is last week was a Tom DeMark sequential count, 13. So if there was going to be a short-term top, well, it could be right around now. The price would need to really have to close well below Stevie's red line, which is 159.37, in order for that to take place out there. Now, you know what I mean. There's nothing more bullish than a failed bearish pattern out here, and one of those Tom DeMark sequential counts could be considered. We're not there yet, but it seems the market has ignored certainly last week's signal out there. If we go take a look what's going on a monthly time frame inside of the IWM, this thing looks beautiful. But really, we took a look at the longer-term time frame chart out there, and so the reality is longer-term inside the Russell, it has a lot of room to run to the upside. When the market gives you and I additional information, then we'll go ahead and use that information and come up with some type of different analysis out there. But, Alex, those are the numbers when we take a look at what's going on inside the Russell. Not until sellers and buyers, the combination of the two, give you and I anything different, will we believe otherwise? David H., he wants to take a look at Baidu. So let's go take a look at Baidu. We'll go ahead and read the question as well, but we'll go ahead and punch this in so we can see what's going on inside of Baidu on a daily, a weekly, and a monthly basis out here. Of course, that's just a stall tactic, so I can type it in on my other screen. And the question is from the high of May 16th. Okay, let's take a look at the high of May 16th. Let's put out a daily chart out here. So May 16th, is that the high? Yeah, May 16th. Nice little wide-ranging bar to the upside. Volume there about 3.7 million shares. And that was taking out a swing point with 2.5, so not too shabby. So the question goes on from the high of May 16th down to the gap of 239.40. 239.40. He didn't tell me where that is, but I'm going to guess the gap right here is about 239.40. There you go. April 26, which was filled today. What do you think the heart says? What do you think the heart says Baidu will do this week? The heart, H-A-R-T. What do I think the heart? You're not talking about my heart, are you? My heart doesn't have anything to say with regard to Baidu. Let me come to the daily time frame chart. Let's try to figure out and just simply answer the question for David H. Where is Baidu headed? Now, we can see here is Baidu certainly gapped to the downside with some pretty big volume out here. The volume Friday, 16 million shares. Today, 11 million shares. So it's just simply, you don't see the chart? Typo. Chart. Oh, chart, not heart. Got it. Hey, thank you very much. I like that. Hey, you just simply type like all of us here at TFNN, and we get that from. It's a trademark of all of us at TFNN. We sometimes, our minds are saying one thing and our fingers are doing something else. So what's the chart telling me? Hey, you would have thought I could have picked up on it. It just shows you. Is Vanna White, is she still spinning the wheel? I wouldn't do very well, apparently, in that game out there. But in any event, I can do pretty good inside the game of answering the question, where's Baidu headed to? So you're exactly right. Prices come down to one potential support level out here, and that is by coming into the gap to the upside, which, by the way, the volume on the gap to the upside was 8 million shares. To the downside, big volume. So is 239.40 going to hold? I don't know. Would you enter a buy at this stage of the game? No, I don't see that. I certainly don't see that on a daily time frame out here. So where would price head to? You know what? We have to go take a look at some other time frame charts out here. Let's go see what's going on a weekly basis. The weekly basis, this says, okay, you've got some pretty nice support, 2 levels of support, either the point of control, the center of the box at 230.66, or the bottom of the box is a bullish structured box out here, and that'd be 219.26. I would be more apt to say that would be the price area, 219 to 230. But let's go ahead and let's get a second opinion on that. Here's the daily chart. This daily chart says, hey, you've got a hammer candle down here at a price date of April the 25th. So you'd be watching that area. Actually, on the daily chart, you got Stevie's red dashed line. So 231, about 231, well, let me tell you what it is. It's going to be the high of this hammer candle, 231.46. So the daily chart says 231.46, another 10 bucks. That may be a place of support. That is where price should head to. If we go take a look at the weekly time frame chart out here, what's this? This is a different story. So we know the price is moving higher, doing less relative energy last week. Does it with a dark cloud cover. This week we're trading below Stevie's red line. This then says to me, okay, you're looking at the bottom of the box, the 219.26 area, to try to gauge a feel for what price is going to be doing as it gets down there. Is it continuing to move lower with volume by trading into the swing point from the week of February 9th, 2018? If it does, then you've got to hold your ponies or your horses out there, because then that says, price could be down in the 178 to the 184 level. Lastly, let's go take a look at the monthly chart. We can do this in about 10 seconds out here, as long as it populates. This says 202.31 is a level. Here's the bottom line. Baidu's not a buy, as in a B-U-Y, today. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Don't forget those phone lines are open, 877-927-6648. That also means you can let those fingers do the walking. You can always send me an email, steve@tfnn.com. Just put radio show question inside that heading, and I will get to your email. It goes right to my phone, typically, right away. So, but don't wait till the last segment. There's only 2 minutes there, and that just becomes more complicated to try to get to your specific question. We had a question inside the Tigers Den earlier. That was Ruby. Ruby Tuesday wanted to take a look at palladium. Ruby is in it from a long position. We like the price action today, Ruby, because it has taken out the high of the top of the TAS daily profile. That is panel number 2 from your right-hand side, and that level was 977.90. You're trading 985.30. So now you've got fresh sights set on the top of the weekly profile. That is 1,940 out here. You like the movement inside the 60-minute. You've got those green shoots. You like it in the 240. You like it in the daily. The question is, are you going to like it in the weekly? Well, you're going to like it because you're long, as long as this continues to head to 1,009. Oh, you said platinum, not palladium. Well, you got a 2-4. You got a twofer out here. I apologize. A dyslexic because I see things differently. My apologies. So let's go take a look at platinum out here. Oh, platinum is a different story. Platinum looks pretty nice off of the lows out here from about the time frame of 7 o'clock this morning. This thing really took off to the upside. So we like the green shoots on the 60-minute time frame, the 240-minute time frame as well. Let me see. I'm pretty sure I can pull up platinum on my other chart out here. A, B, C, D, F, G, H, L, M, N, P, Q, P, 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 platinum. There we go. See, I just had to do my ABCs just to figure out exactly where I was. Yeah, that's a monthly time frame. That's not so good. Let me put up the daily time frame, though, because daily this says 905.80 becomes the price area. So this is kind of interesting. So Ruby, Tuesday, or those of you that are trading platinum, you're going to like the daily time frame chart out here. Why? Because price was moving lower, doing less relative energy. You always like to see something like that take place out here, just like when it moves to the upside. That's how instruments make bottoms, and that's how instruments make tops. Well, what you have today is your good old key reversal session. Yeah, it's a bull candle, bull sash out there, and you're closing above. Well, I don't know if you're closing above. You're trading above Stevie's red line, 896.10. That's the number that you want to write down on your pad of paper, Ruby. 896.10. You want to see price close above that. If you do, then that says, okay, you may have a change in trend. But you'll see just above us what price really needs to do next, right? You kind of go through a checklist out here. And the next up on the checklist are those TAS market profiles. Is old support new resistance. I don't know the answer to that. But if we take a look at the daily time frame chart, you'll see that it is a bullish structured box, but you're trading below it. Can't be bullish structured if you're trading below all the action out here. And the action, as we turned off price, says you had a bullish structured box. So 909.30 becomes really the next up on the checklist. We're not too concerned about 905.80. It's can price close above the center line of the box that is closer to the bottom. If it does at 909.30, then you're off to 923 out here. So the question for you, the question for me, is this a short squeeze? Is this just a counter trend rally? What is this? You'll know the answer as price explores, and it probably should explore the 909.30 level. Doesn't look like to me the weekly is of much use to you and I. Oops, and especially when you delete a chart like that. I accidentally, I don't know why they put the minimize button right next to the X marks the spot and close out the chart. It's not the first time I've done that in the last 48 hours. So I'm starting to get a little bit concerned. So that chart is gone. It's history. It's toast out here. But with regard to platinum and where it's headed to, 909.30 looks like it's the spot. And it very well could be the sign of a bottom, because price was moving lower, doing it with less relative energy. So thanks to whoever it was, Mike K, that was my wingman out there, really Ruby's wingman, by saying, hey, Steve-O, she wasn't asking about palladium. She was asking about platinum. You got the P right, but you missed the second item. Oh, we got two more questions that have come in. By the way, thank you for sending in those questions. Mucho appreciated out here. So we've got a question about a ticker symbol EGN. I don't know what EGN is. It doesn't matter. We're going to go find out what EGN is, because that's what JJ wants to go take a look at. So let's go take a look at ticker symbol EGN. Kind of sounds like Energen Corp. Well, it's having a nice move today, whatever it's doing out here. So let's go take a look at Energen, see what it's doing. Taking out that little shooting star from May 9th that had volume of 2.8 million. You're at 2.7. So this thing is breaking out on a daily basis. No problem there. So let's go take a look at a bit of a longer term. Icon Rape and Pillage, ETN employees. So this is a, what did Carl mention something today? Because you've got a nice move in it. Maybe it was not today, I don't know, but you got a nice move in it, and that's coming from our wing men and women inside our Tiger's Den out here. So let's just do this. Whether Carl's in it to win it, which we know he is, or not, let's just see what happened. He bought 10% or so. Okay, so you've got swing point from December 2016, about 18 million shares, and that was passed last week with 23. So whether Carl's in it to win it or not, there's now a confirmed A to B equals CD to the upside. So if you're wondering where Carl thinks EGN is headed to, not that I've spoken to him, he's probably saying all the way back up to its highs. 89.92 is your 1-for-1 A to B equals CD out here. That's also where there was resistance back in July 2014. Again, it's a monthly time frame chart that you and I are looking for. But JJ says, hi, Steve. Where do you think EGN is headed from here, short to midterm? Thanks. I think it's going to be the same answer, short to midterm. You've just got you've got a monthly A to B equals CD to the upside. Whatever Carl's doing here isn't going to change overnight, I wouldn't think. The swing point on a weekly basis, let's just test that. 7 million shares. What's that passed with? 12 million shares. Yeah. So it looks like your good old-fashioned fight is going on inside of EGN. Here's a monthly time frame chart as well. So that looks pretty good. Curious what it was doing on a daily basis as it was making its lows out here. Well, you got a hammer candle that came in on around February the 9th out here. So, you knew where the buyers were trying to put in a bottom, and voila, they did. Now, the interesting thing on the daily time frame chart, I know we talk about that little dashed green line, and price today clearly above it, so it's telling me it's entered a new phase of price out here. And so, yeah, I think that $99 or whatever, $89, $100 area. Looks like that's what is in play out there. So thanks for writing in, and thanks Inside the Tiger's Den for letting me know what's really going on. Without you, I'd be lost. We come back from this break, the final 2 minutes of play. We're going to answer for Michael P. He says, hello, Steve. Hey, Michael. I'm thinking the XLE may lead the SPY. Any thoughts? I think the XLE is lead the XLE. When we come back, let's go take a look at the energy sector of the S&P 500.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TFNN Memorial Day Tiger Dollar Special has just been announced. For 1 week only, we're doubling the bonuses that we normally give out with any Tiger Dollar purchase. Normally, when you purchase Tiger Dollars, you can receive a 10, 15, or 20% bonus with your purchase, but through Memorial Day only, we've doubled the bonuses to 20, 30, and even 40%. This is one of the best Tiger Dollar sales that we offer, and they only come around a couple times a year, so don't let it pass you by. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire. So whether you're already a subscriber and want to add savings to your monthly or yearly subscription, or you're thinking about signing up for anything in the future, now is a great time to get your Tiger Dollars. For all the details on the Memorial Day Tiger Dollar Special, visit the front page of TFNN.com before this deal ends May 28th.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So the last question of the day, I believe it came in from Michael P., who was asking our thoughts on the XLE, and Mike's thinking is that the energy sector is going to lead the S&P, and was just asking for my thoughts. Maybe the XLE, Michael, is getting ready to do a quick handoff to one of the other sectors, like maybe the financial sector or one of the other sectors, maybe back to the technology sector. If we take a look at the energy sector, it has had a nice run, no doubt. But we can see on a monthly basis that where price is headed to should be, could be, might be. How do you like that for vagueness? Let's not be vague. You've got some really significant resistance at 81.17. That's the top of its monthly profile. The profile that we're looking at has a bearish structure. The center line at 76.18, closer to the top of the box. I'm not saying that it can't take it out, but Michael, what it's doing right now is it's running up towards resistance. It's got about $3, $2.50 or so to go before it hits that level. The question is it going to be overrun by sellers there? Maybe it's just going to start moving sideways or something. But again, you and I, we're looking at something that's a little bit more long-term out here. Now, just curious about the XLF. No idea what this looks like. But as we take a look at the XLF, well, this thing has been climbing the wall of worry by getting all the way back to where, the 2007 highs out here. Price came back, found support at the bottom of its monthly box at 26.40, now headed back to 29.02. The question is the XLF going to go ahead and start leading things to the upside? Well, Michael, if you and I take a look at the daily time frame chart, you're going to see that its price oscillator Friday, Thursday, and today right at that zero level. But today, what it is was a test and rejection, meaning the financial sector now has a rising price oscillator above zero. So look, it's got to clear 28.45. That's the top of its daily box. But if it does that, then the chart here for the financial sector looks awfully bullish. Not that the XLE doesn't, but maybe in the relay race to higher prices, what you're going to see is a bit of a handoff. Is it the financial sector? I don't know. Looks pretty good so far. Hey, folks, thanks so much for being here. Stay tuned. Your favorite polar bear, my favorite polar bear, Coca-Cola's favorite polar bear, David White. He's up next. I'll see you back at 3:15 with Tom. Otherwise, a terrific Tuesday at 1 o'clock tomorrow. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.